To say that Tesla has been on a roll lately is quite an understatement. The electric car maker recently received the coveted trillion-dollar market capitalization. To put this number into perspective, this valuation is 15 times that of the great American automaker Ford. So yeah, the Tesla shares are gold standard now. But what if we told you these shares are going up even more? What if there was an inside scoop that pretty much guarantees that Tesla stock is going to explode in a few months? Welcome back to Tech Nation. Today we're going to tell you the reason why you should be buying Tesla stock. Before we start, make sure to subscribe to our channel and also press the notification bell so that you never miss out on any new content. So without further delay, let's get started. For many years now, Tesla has been the only automaker that truly appeals to the millennials. It's been helped by the fact that Tesla has been quite consistent in its progress. The Silicon Valley automaker has the most advanced cars and the biggest charging network in the world. They're also years ahead of their competition when it comes to the autopilot system. However, no company is immune to problems. There have been a few chinks in Tesla's armor for a while now. The biggest concern for major investors has always been the low production capabilities of Tesla factories. Just look at the Model 3 queues and you'll see deliveries that are way behind their schedule. Another thing that has been bothering Elon Musk as well as other major players is the fact that Tesla heavily relies on third parties to produce powertrains and most importantly batteries for its vehicles. That's a big no-no for most market giants. To address these issues, Musk announced back in November of 2019 that he's building the 4th Gigafactory in the heart of Germany. He even tweeted a picture of the grounds where the biggest electric car factory in the world will be made. The new factory will be constructed only 20 miles from Berlin, and it's appropriately named Giga Berlin. The German government even pledged more than $1 billion in subsidies. This news gave a big boost to the investors, but Musk quickly found out that building a giant factory in the heart of Europe isn't a piece of cake. Tesla was overwhelmed by all the red tape that Forbes called the bureaucratic hell. The situation was worsened by the epidemic, and the progress on the factory didn't happen as fast as planned. When the work was finally completed in the summer of 2021, Tesla got hit by an environmental lawsuit which led to further delays. However, after months of deliberation, the German stakeholders finally gave Tesla the green light, and the factory is now operational. Musk even hosted a big public event for the local population to show them the working of the factory, and he explained how it will improve the local economy. He promised a well-paid workforce of over 10,000 people. He also announced that the factory will not only accelerate the production of the newest Tesla car, the Model Y, but it will also manufacture in-house powertrains and battery packs. This last bit of information is extremely important because it pretty much solves all the concerns that investors had regarding Tesla. It ensures that Tesla can control the supply chains as well as maintain a steady production rate of their most popular vehicles. To understand the impact of battery packs on the share prices, you only have to look at the share price hike that happened earlier in the year 2021. Back in January, the world's biggest car battery maker, Panasonic, had sold off pretty much all of its stake in Tesla. However, Tesla quickly signed another long-term deal with the battery giant, and this led to an unexpected price increase for Tesla stock. If only a third-party deal can lead to a better valuation, then it's not a stretch to say that the announcement of in-house battery production is going to increase the share prices dramatically. This is further helped by the fact that the battery plant inside Giga Berlin will be the largest one in the world. It can provide battery packs for up to 1.3 million electric vehicles annually. The other important factor is the sheer scale of this factory. Tesla produced almost 500,000 cars annually for the past 2 years. However, Giga Berlin can produce 500,000 electric vehicles all by itself, effectively doubling Tesla's production capability. This is a huge number for not only electric cars but for any car factory. In comparison, Volkswagen Group's biggest car plant can produce 700,000 cars in 2019. So it's safe to say that Tesla is finally catching up with the big players when it comes to the raw production capabilities. This is more good news for the Tesla shareholders because improved production numbers always lead to better market valuation. Tesla defied Wall Street estimates in 2020 by manufacturing more vehicles. The result of this higher-than-expected production was an astounding 700% increase in the share price in a single calendar year. So when all other automakers were facing huge losses due to the pandemic, Tesla became the biggest automaker on Earth. All this was possible because Tesla delivered on its promises, and this new factory will help Tesla achieve more of its targets. Right now, major investment companies are estimating a 40% increase in the share price by the end of 2022. This is remarkable considering a Tesla share already has a mouth-watering price tag of over $1,000. However, we believe that the start of Giga Berlin is going to put the real price way above these estimates. If we can say anything about Tesla, it's that this automaker has always defied predictions, and it has shown some miraculous growth that made a lot of people extremely rich. And we believe that this growth is going to be accelerated by the newest Gigafactory in Berlin. Don't forget to give us a like if you found today's video to be interesting. Subscribe to the channel and hit the notification bell to see more videos like this one in the future. Thanks for watching, and we'll see you in the next one.